Hey, everybody. Welcome to Market Mavericks. We are here to discuss all the big data points and the charts with you guys. I'm joined by Scott and Mike. How are you guys doing today?
Great.
Awesome. So let's not waste any time. We do 30 minutes, quick and fast. And number one, the way I'm looking at this market, and I'm not talking crypto, more the stock market right now, is that everything's all about the latest tweet or post on X. It's like the markets are waiting, and then it's either like, oh, we got close to a trade deal, markets rip up, or oh my goodness, we're going to threaten tariffs more and markets collapse. What do you guys take on this?
It's terrible. I joked when Trump coin was launched that for better or for worse, Donald Trump now controls the crypto market. And that was obviously fundamentally true. We know that the crypto market has largely moved based on announcements from the administration. I didn't necessarily expect that that was going to be for all markets. But that's where we are now. And I think you're absolutely correct. I mean, today, you saw volatility and price movements to the upside simply on Trump saying that he thinks that maybe we'll get a great deal from Europe, right? Yeah. Or the comment that we're going to do a great deal with China based on nothing except for him saying he thinks he's going to get a great deal, markets go up, right? And then China obviously retaliates and says that the United States peasants are going to cry in front of 5,000 years of Chinese history and markets go down, right?
Yeah, well, and I think it's interesting, Mike, and I'll let you jump on here. But I think, number one of the things I'm taking note of, at least with the stock market, is that we're getting earnings out. If the earnings are bad, stocks are getting crushed. But like Taiwan Semi reported good earnings, and the stock basically didn't do anything because everyone's saying, well, that was last quarter. But now look at all the mess that there is. And so they're not really rewarding stocks to the upside that are posting good earnings. We'll see Netflix today. Netflix will be interesting after the bell. But go ahead, Mike. What's your take?
Well, I'm going to show you a few charts in a minute, but first I want to give the foundation for earnings. First of all, before Trump was elected, Gina Martin Adams pointed out, or before he was inaugurated, that earnings expectations were too high, they're healthy lower, the stock market's very bearish. The bottom line is some of my Bloomberg colleagues are shockingly bearish. I haven't seen this before. So for instance, Gina Martin Adams, our equity team, thinks it's potentially going to have a recession, which means fair value for the S&P 500 is 4,000. Now, that's not a big deal, but it's a 1/3 correction. And I want to point out just a few charts if I can as I go through some of my wrap here, just for a few minutes. The key thing that's happening is this top chart here. That's the S&P 500 divided by the rest of the world. That number here, that level here, we were just a few months ago, was the highest ever. I just take it from 2005, and I show it just relative to the MSCI ex-US index. This trend line has been in place for 20 years. We are breaking below it. So that's a deflationary force. Same time, this is U.S. stock market cap to GDP. It was 2 times GDP just a few months ago. There's only 2 times in history we've had that, significant times in major markets. 1929 U.S., 1989 in Japan. I was somewhat involved in 1980 in Japan working for Japanese firms. They're still imploding. At the same time, this is deflationary forces just catching up to what's happening. Crude oil is already heading lower, and Chinese government bonds yields are already heading lower. And again, this is me. I was trading these in Japan 30 years ago. The world is tilting towards deflation. We have a significant reason to do it now. The thing I want to point out is what's really changed is the companions have broke up. This is gold heading higher, and what was all heading up together was the S&P 500, Bloomberg Galaxy Crypto Index, and the S&P 500 are heading lower. This is what people have learned the hard way who bought all those ETFs. They are learning so far that they bought leveraged beta and not digital gold. That's a fact what's happening. What stops it is a key thing I want to point out. This is something I published on yesterday. One of the best indicators that's worked for hundreds of years, the gold to silver ratio. It's above 100. I published this yesterday, got a lot of hits on it, and just pointed out what's significant about this. It's a sign of always spikes, almost always gets spikes when you have recessions. That's what you see magenta. It's breaking out higher. One thing that's notable, see this chart? I thought, Scott, you and Gareth would like this. That's unemployment. It looks like a bull market breakout to me if you look at it as a chart. That's unemployment rate. It's only, we talked about this 2 years ago. That's going to go to 6%. And that to me is what happened. It's a delayed reaction. So I just want to get a little bit into Bitcoin, and then I'll leave it there, and I'm sure we'll have a lot to talk about. People have been pushing back a little bit on me and might just point how Bitcoin is going to have a normal mean reversion. I'm pointing out here is 200-week moving averages of Bitcoin and the S&P 500. They're basically the same. They're still heading higher. It's still a bull market, and they're just heading back to those moving averages. Guess where they are right now? It's a Bitcoin to S&P 500 ratio about 10 to 1. That's about Bitcoin 200 week. I'm sorry, this is 200 week moving average is about 4,600, and the 200 week moving average in S&P 500 is about 4,600. Our team in equity says the fair value for S&P 500 in a recession is 4,000. So this is part of my reversion. They trade together. They're the same chart. And then I've also enjoyed how people push back in my call for 10,000. I'm really sorry. That's well below their profit market. But this is one thing you have to get for someone who's completely unbiased in markets. I've done this for decades and just point out what usually happens. So if you look at the S&P 500 overlaid with Bitcoin, on an autocorrelated chart, this is not me this is just the autocorrelation market. If the S&P 500 gets to 4,000, what I show you here is the high volume price. This is market profile. I used to trade by these things, made a lot of money, lost a lot of money trading this. It just shows since 2017, which was the significant year for Bitcoin. That's when futures were launched. It's when people like me could start leveraging. The high volume price is below 10,000. The average price from 2019 is below 10,000. Normal reversion means unless that crypto can way outperform the stock market, which notably it has been, Scott's been pointing out a lot lately, it has to. So I'll end with this one chart. This is not me again. I'm trying to play a little plausible deniability with my outlook, which is just normal reversion. What you see in orange, that's a Bitcoin specific driver index set up by a bunch of real smart PhD people at Bloomberg. I don't even know how they did it. I read it. It's overlay with the Bitcoin to gold ratio. It trades tick for tick until Trump was elected. Right now, with Bitcoin gold about 25, it shows fair values below 17. That's just based on the model.
So again, just to summarize here, you're saying that Bitcoin could go down. If the S&P goes to 4,000, you could be looking at a $10,000 Bitcoin, correct?
Well, that's based on past performance. That's exactly where it was. The last time it was around 4,000. Bitcoin was around that level, which I point out on this chart. And I'll show the concentration. So what happens in markets, the lesson I learned sometimes is markets, when they revert, go back to their concentration of volume. Not typically a mean, but the mode. The mode's where it trades the most. And Bitcoin traded since 2017, since it hit the tape in being, in the space where people like the hedge funds that I speak a lot to on Bloomberg were involved. The high volume era is way below 10,000. Typically it goes back to that area in distress. Now I'm pointing out the stress. I'm pointing out a typical recession we haven't had, the one that was delayed for 2 years. A good reason for it to come, tariffs. What a good way to knock corporate profits, because the whole reason a lot of firms in this country offshored was for profits. Austerity, and I just pointed out that's a level it could likely go to. The good news is, Scott points out a lot, lately it's been showing divergent strength, but we've seen that before if beta keeps going down.
So Scott, tell us why that's insane. Tell us why 10,000 is insane.
First of all, I'm looking at the chart. So first of all, taking the Fibonacci levels from the March 2020 lows on the SPX, 4,000 makes a lot of sense. Just in Mike's defense, that would simply be a 38.2% retracement. You would usually see that using Fibonacci levels in any market. And if you actually look at these, they've played out incredibly well. Look at the 23.6 was exactly where that January 22 high was, also exactly where this low has been so far. But that would be 41.45 would be retracing. The thing I question about what Mike is saying, last time we were around 4,000 on the S&P, I mean, we were at just under 4,100 in October 23, certainly at 4,000 in May of 23. Bitcoin, that's when Bitcoin was consolidating in the 20s, at like 25. It hasn't been 10 since way before that. So I mean, literally the bottom was 15 and 22. So I just don't see that. I didn't see it necessarily on your chart, but I mean, the last time that Bitcoin was 10,000, I mean, that was in 2020. Right. So, I mean, you're talking, that's SPX all the way back here at 3,000. So I don't see I just don't see the S&P 4,000 being Bitcoin 10. Maybe I could see the argument then that it's Bitcoin in the high 20s. I also don't think that's happening. Also, I think that this year, at least, Bitcoin's has not been 3x the volatility of the S&P, and certainly the last few weeks.
I think that's been far more volatile. Scott, I think you're making a good point. Is that at least for now, Bitcoin is not having its normal correlation of magnitude of fall with stock
to gold either. It's just going sideways. Right. So that's a good thing in my mind. But yeah.
Well, just want to say, Mike?
It's the point of, I made the call before. I made the exact same call in 2017. I just said it's going to drop to zero when it was around 10,000. And darn, I was wrong. At the bottom was 3,000. It's like, I'm sorry. It's just a lesson you learn in trading. You can't always pick the peak or the trial, but getting 70 70% in between works. And that was like, okay, I did it before. I see it's worse now than ever, partly because the stock market is here. I point out the most expensive in 100 years. And this is typically what happened. It happened only 2 times in history that I'm aware of, 1929 US and 1989 Japan. When you get to be 2 times GDP, stock market's all that matters. And it's starting to reverse. So that's why I just point out that it's, so far these are bull markets. They're just going back to long-term means. Maybe Bitcoin's can continue outperforming. It has, but one thing is, the problem is it's part of that Bloomberg galaxy. It's part of all the cryptos. There's millions of them. Tremendous dependence, and I just look at that Bloomberg Galaxy Crypto Index. It's down about 1/3 on the year, and I just never seen a broad cryptos go down with Bitcoin going up. Now, good news is lately Bitcoin's been outperforming, but here's the bull markets in cryptos. Bitcoin dominance is going to continue to increase. I think it might get back to 90%. Yeah. And the proliferation of crypto dollars. But here's part of the problem with the tech. First of all, the technology is awesome. I don't disagree with that. But remember, Bitcoin was started out as peer-to-peer cash? Well, I don't think Satoshi Nakamoto anticipated that the proliferation of crypto dollars would prove that, well, that's a better peer-to-peer cash. You don't peer-to-peer cash. If you can transact with crypto dollars across the world on your phone, why do you need to take the risk of 100 times the volatility of that for a token? So to me, that's part of what's happening with the technology markets, realizing that, yes, Bitcoin's great, digital gold. It's realized it's more of a commodity, and commodities always mean revert from going really high, which it's doing so far. And by the way, peer-to-peer cash means you can use crypto dollars, Tether, USDC, you name it. What is it, 230, 250 billion now, crypto dollars?
Yeah. Yeah, I think, and again, just a couple of things that I think are interesting is that I think the difference that maybe keeps it above 10,000, and obviously I have no clue in the longer term, but you have a lot more adoption by institutional money, right? So the question, I guess, would be is, does Goldman Sachs, BlackRock, do they allow, or are they just buying in such a frenzy? And then the other thing to just keep in mind is, I mean, if it went to 10,000 and Michael Saylor, what is Michael Saylor's average price? Like 70,000 now?
68, 60.
Yeah. I mean, like at some point that could be catastrophic. And this is one of the reasons why I don't like any one entity owning so much Bitcoin, is that if they ever get margin called essentially or liquidated, I mean, it could be nasty.
It's not an if. It's always will happen in markets. As Scott and I know, I always talk about the market gods. Michael Saylor did do most significant temptation market gods I've ever seen versus Warren Buffett. Warren Buffett's crushing it this year. And we're learning why. We're learning what has happened. So far, let's look at the facts of this year. Anybody at the beginning of the year when we had a paradigm shift with a new president who overweighted gold and bonds and risk-off assets is doing well. Anybody who overweighted risk-on assets, like he suggested, is doing poorly. What does it change? What changes? So what happened last year? We had the most significant ETF launch in history. So far, we've had just the last 3 months, including this month, and up to February, March, and April, we've had $5 billion of ETF outflows from Bitcoin ETFs. And you can see it on my chart, because people are realizing what they bought was not what they told it was. They bought something that just acts with a much more high leverage ratio with the stock market. That's not what they wanted. They're getting leverage beta. Great, but that's what's been happening. Lately, it's been outperforming. The key thing is I'm pointing out is at the same time, we've seen almost $22 billion of inflows in gold ETFs. My question, as Scott hears me says it all the time, is what stops that? The key thing that can accelerate it is just a normal reversion in the U.S. stock market that might have just started. And that's why, unfortunately, I always put levels on it. Where can we go? Like I said, I did it in 2018. It didn't get to, it was about 900 I was looking at the time. It got to 3,000, but it dropped 70%. Putting 10,000 is a normal level. Now, I don't want to piss people off with that too much. Just pointing out what happens in markets and remember what this is. It's proving it's more of a commodity. And one reason it shows it's more of a commodity is that the example that I'm impressed Scott Bessent has been using with the example of the rest of the world trying to export, certainly China to the U.S. It's like, as his quote was from the movie Fantasia, the buckets, the broomstick with the buckets. When the sorcerer's apprentice makes he tries to do the spell, but he can't stop it. That's what's happening with crypto supply. There's unlimited supply of cryptos, and Ethereum is part of that pressure.
Interesting. I want to just show a couple charts here because I've actually turned pretty bullish. And I remember, I'm a shorter term trader, so I'm in for days or maybe a week or two in most of these trades. But I'm very bullish on some of these altcoins right now. I'm looking at potential breakouts on Ethereum. And again, remember, this has nothing to do with whether in a year or 2 years Bitcoin's at 10,000. This is just more short term. But I'm loving this trend line. Look at how it's creeping above on Ethereum. And then if we look at XLM is down, flushed into major support, both short-term and long-term. bounced up and is now bull flagging. If it can get above this, and again, there's a lot. I mean, it could go to almost any of the altcoin charts right here, but a lot of these, at least in the short term, are looking very, very bullish for potential short-term moves. And then if you flip over to Bitcoin, just in the very short term, you do have a bull flag here. In fact, let me just bring up my Coinbase chart. We had a breakout above this trend line here, and this is classic bull flag consolidation. So I could see at least, listen, again, who knows where this is in, let's say, 3 months from now, but in the very least, short term, I think we go back to 92 on Bitcoin. And that does imply maybe a market bounce in the near term, maybe a deal with China, or at least us talking. Maybe we've talked about like Europe. Is there a tweet on, oh, we got to deal with Europe? Any of those type of things would probably be risk on, and we could get these moves. But at least the crypto charts right now are looking really, really good.
Well, one thing I have to mention about, and that's Scott Tilton, is what's what you're supposed to do? Trade. It's a tremendous trading environment. But the old days of buy and hold, and when the beta's on a tear and the U.S. stock market reaches the highest ever in 100 years and versus the rest of the world, I think we've reached that inflection where we're reverting that. And it's part of the plan of the Trump administration, shifting that wealth back to the heartland.
Scott, in terms of altcoins and crypto in general, because Bitcoin's kind of stalled out, you've been to a lot of these conferences. You go to almost every one, I think. Like, have you noticed, is there less attendance? Is it people less excited now that Trump's in and there's nothing really going on? Or is there still like the craziness?
There's less attendance because I haven't been to one since Singapore the end of September, early October. And I didn't go to Paris last week. And I'm still wavering on Dubai in 2 weeks because the exact same reason. Yeah, there's a little less excitement. The upside of the conferences, to me, the ROI just isn't necessarily there. Just taking a look, obviously, here at Coin Market Cap. I mean, we have had some decent performance actually in a number of altcoins, especially the obvious ones like Solana. I mean, it's up 21% in a week. That said, I agree with you that there's a lot of really good short-term trading opportunities. Bitcoin dominance looks temporarily topped, but I agree with Mike that generally the Bitcoin dominance trend should be up because there's Bitcoin and there's memes, and nothing in the middle is catching a bid because of that supply that he talked about, right? So the real degenerates are in the casino on one side. They don't care about Bitcoin at all. They're flipping, whatever fart coin for Solana back and forth. And everyone else who's remotely serious is in Bitcoin. So we're just waiting for some of the utility in the middle that used to be where the speculators played to sort of catch a bid, I think. But I tend to agree with you that right now, a lot of these altcoin charts look like they're bubbling up for at least a little run. But this has not been the cycles of the past. In a previous 4-year cycle, if Bitcoin went to 109 and then started to consolidate, you would have seen altcoins pulling 10Xs, right? Yeah. Across the board. And it's just not happening.
Can I piggyback on that a little, Gareth? One thing I've noticed compared to all the conferences I've gone to in my almost 4 decades in the business, the crypto ones, the Bitcoin ones are very unique, and you get a lot of people telling everybody what they want to hear. It's very confusing. It's very discombobulating. I'd be very careful because I was on a panel in December, Miami-Dade College, and I was just pointing out what's happened out. Yes, I was early. I was just pointing out how the stretched U.S. equity market is. It's not going to last. Even if Trump was elected, it just needs a trigger. Now, we got the trigger for reversion, which means all risk assets going to go down. Cryptos are risky. So I'll just point out that facts. And one of the guys in the audience started really pushing back. And the guy in the panel said, yeah, well, Mike's one of us. I'm like, no, I'm not. I don't know what you are. I'm just pointing out this is what I think of markets. That's the key thing you have to remember about this space. It's a bit of a cult. And when you go to these conferences, everybody gets on telling people what they want to hear, which is the wrong thing to do. You need to hear the counterpoint, and which is part of the reason I'm accentuating this potential to go back to 10,000. People need to understand the risks of a highly speculative, somewhat commoditized digital asset. It's very much trading like a commodity. It's classified as a commodity by CFTC. Fact. So that's why I point out normal reversion, to be careful that don't overweight in your portfolio. And when I hear people like my son's 30-year-old friend telling me he's got an inordinate, vast majority of his wealth in things like XRP, I'm like, oh God, I've seen that happen from young people in trading pits. It doesn't usually work out well.
Yeah, diversification is the main key.
Exactly.
In fact, I would almost guarantee, Scott, you love crypto, but I guarantee you're diversified between almost all asset groups.
Yeah, of course.
Yeah. All right, so I got to bring this up, and this kind of ties into one thing that Mike talked about early on when you showed the breakdown of the S&P, the long-term trend, I think it was, of the markets, where you're starting to see outflows from the United States. And I think this is the dollar chart. And Usually the dollar, when there's crazy mayhem in trade wars and all this other stuff, the dollar and treasuries are the place that people run to hide. Yet we've seen the yields go higher, which means people are dumping treasuries or not buying them as readily, and the dollar collapsing. Walk us through, guys. Like, what is this? The dominance of U.S. starting to fade?
Well, I'm going to piggyback on that first. That dollar chart, taking the U.S. dollar, overlay it with what I showed with the S&P 500 divided by the MSCI, the rest of the world, it's the same chart. It has same chart syndrome. They're all went up together. Now they're breaking down together. It's the same chart as this one. They're breaking down. They broke the trend line. Maybe it's not going to happen. Maybe something will save us this time. The Fed will ease. Oh, they can't ease. Maybe we'll get massive fiscal pumping. Oh, we're doing austerity. See, the end is near. It's like I said. So to me, that's the key thing that's happening is dollar breaking out. And it's also, from a global standpoint, the sense I'm getting from, dealing with a lot of people I hear in Bloomberg is it's a GMTFO from the U.S. Get me the heck out. I've had a great run. I think I was since 1999. I showed on that chart earlier, the U.S. stock markets outperformed the rest of the world 4 times. I mean, that's only happened a few times in history. And you've had some great profits. So I'm sensing from a lot of money's offshoring, they're wealthy profit dollar. The thing is that, like you mentioned about bond yields earlier, I still think that's one of the next big trades. I've been wrong, but what's happening is the rest of the world's easing because they're heading towards recession. China's had major problems. They have to depend on fiscal monetary stimulus. 10-year yield in that country is 165. So, and with this, the key thing I think is going to be where we're going to go is the top 3 major exporting countries in the world: China, Japan, and Germany. Their total GDP is about the same as U.S. The average of the bond yields are about 190. And they are significantly predatory exporters, and they're all going to have a major problem from the U.S. The key thing I wanted to point out is when I showed that that gold silver ratio, everything in commodities was pointing to this before Trump was elected. This is the problem. Now we have a major catalyst for what was the signals to kick in. And again, it's like, where's unemployment going to go? There's only one place in the U.S. right now for it to go, is up.
Well, I guess my point too is when you look at the dollar, and Mike, you can answer this, maybe even in relation to crypto. We know gold's ripping. I mean, gold is just ripping higher. Bitcoin's holding up. We all agree much better than it has in the past with the stock market selling. But is that because people, like, let's say China, right? China's kind of pissed at us. Let's be honest. They're probably not rushing to buy U.S. debt to stabilize our yields and push the yields lower, which is what Trump's been saying. And let's be fair, he ripped Jerome Powell last night in a tweet on Truth Social about, can't wait till he's out, blah, blah, blah. He's whatever, But the point is, I guess, Scott, is this the beginning of that dollar de-dollarization that we've all heard about?
I don't think that they can do it, but I think that they'll try to do it. I mean, I do think that there has to be some selling of U.S. debt by foreign entities to see yields continuing to go up in this environment. Can't prove it, but I would imagine that Japan is definitely selling some U.S. treasuries to defend the yen. That would make a lot of sense to me, even more so than China selling right now. But also, I think we do know that China would eventually sell. Actually, what I think is a very interesting narrative is that you have, as Mike likes to call them, digital or crypto dollars. You have stablecoins could end up being the biggest buyers of U.S. treasuries. There's a world where that actually is the case. Yeah. Tether was the 6th largest buyer last year of United States treasuries. And I think we all agree, Mike, no matter what happens to Bitcoin price or any of these things, that there will be continued adoption and a skyrocketing of market cap of Tether and of stablecoins because they just make so much sense and they work and there's a legitimate use case. They're going to buy the hell out of treasuries. The United States should be all over themselves to defend stablecoins right now.
Is there?
We are. Let me just finish that. What you pointed out is the tokenization of one major asset. The tokenization of all assets is an example of how awesome this technology is. Next is treasuries, next is commodities, next it's stocks. But that means all those tokens trading on coinmarketcap.com or on coin, whatever, will have value that'll be arbed against the real value. Then there's all the other BS that's like Dogecoin and Shiba Inu will just go to zero. That's what we're in. I think we're in that point right now, like 2000, where we're starting the purge of the excessive excess in that space, and the technologies are going to outperform. But the key thing to remember about treasury, let's just remember the facts, is central banks in countries and other foreign countries don't buy the long end. They typically buy the short end, 5 years on end. It's private investors would buy the long end. And when people say they're going to sell treasuries, I love that. I've heard it for decades, and I mean decades. And every time people say that, it's almost always been a time to buy U.S. bonds for yields to go lower, partly because where are they going to go? Let's say if you sell that right now, that U.S. 5-year note around 4%, or 10-year note. Let's say in Germany, you're getting 2.4%. In Japan, you're getting 1.3%. In China, you get 1.6%. So you're going to give up 200 basis points for what? All that money has to go someplace. The thing is, the risk is when you just reduce the wealth, we crush the wealth effect. And that's what the biggest thing that's going to support the treasury market. So the key thing is, remember, is the facts. Last year, total stock market cap of the U.S. increased about $12 trillion. That was 40% of GDP. Now, we've already taken back half of that. That's called the wealth effect in reverse. That's where it happens the worst. We went up too much, and you take it away. And we take away more of that shuts down the economy. That means deflation, and all that massive wealth, which got up to about $65 trillion, goes into that 36 or so trillion dollars of U.S. debt, which makes it very small. But the point is, the largest debtors in the world have the lowest rates: Japan, typically, and China.
So, Mike, when you say long end versus short end, just to define that for people, are we talking about the 3-month and the 6-month? Are we talking about the 2-year that foreign countries are buying? Or are we talking the 10? Obviously, long end's 30 years, but what is the definition?
10s on out is typically individual investors, private entities from the rest of the world. 5-year notes on in is typically more central banks or shorter term. And just a little inside scoop, like I've been hearing from some of the smart money people I spoke to for 2 years, and Scott's heard this, and you've heard me how I've been saying for 2 years that long bonds are the next big trade. Been wrong, but gold's offset that. I've heard some of the smart money starting to lane into. Some of them told me, Mike, yeah, now it's finally might be your time buying some of these U.S. auctions lately.
Interesting. Now, just going back to Tether, and this is something you guys in it can answer. I don't know enough about Tether, but when I hear that Tether, and I think it was created in 2014, in 10 years, they've gone from basically brand new birth to being one of the biggest holders of U.S. Treasury. Is there any risk there? Like, can something happen that blows the whole system up, or there's no risk at all?
I mean, there's always some sort of risk that's hidden, I'm sure, but it's pretty straightforward. I mean, even when Silicon Valley Bank collapsed, and I think Tether back then was $50-60 billion. Now it's, what is it, $145 billion. Even back then, they redeemed $7 billion in 24 hours without breaking a sweat. I don't think there's a fractionally reserved bank on the planet that could have done that. I mean, these stablecoins are truly backed 1-for-1 with liquid short-term treasuries and cash that they can get out of. I think they've built a real system for hyper-dollarization and for just a better, transactions, and they're just going to keep buying treasuries. It's free money, especially, I mean, if interest rates stay high, these guys are literally printing money. It's insane.
I got to tell you my quick little story on Tether. It's been one of the most enduring bull markets in cryptos I've ever seen in all the whole space. I was in Hong Kong 2018 after I had made the call when Bitcoin was around 10,000. It dropped to zero. I've done it before. And I remember pointing out in an audience there, this was early in the year, that there was only one bull market in cryptos at the time. That was the proliferation and increasing market cap of Tether. It was only $2 billion. Now it's $144 billion. And also another key thing to remember about Tether, I was still bearish in 2000, still hadn't turned bullish in 2019, somewhat bullish. But when the New York Attorney General came down in Tether, I think it was in March 2019, it dropped the buck for a little while, came back within a day or two. Bitcoin dropped below 5,000, came up, and that's when I put out a bullish Bitcoin point looking for 50,000. It's been a great indicator. But now it's like Scott said, yeah, a lot can go wrong with new technology, but it's the point is, it's the proliferation of this technology. And when I hear people like Laura Shin did an interview with Cy Sheffield of Visa, 4 years ago, pointing out how great it is for them to be able to transact it in their business. You see that the technology is awesome. Yeah. And now, of course, we have the U.S. government behind, but I think crypto people need to understand this is not good for their tokens, because this means the rest of the world can transact in the dollar, the world's base currency, which is flawed, but it's better than something that trades 100 times the volatility of that, and be able to get that transaction, be able to have peer-to-peer cash across border. Cryptocurrency, crypto dollars, I like to call them. It's part of the reason things like XRP I still don't get.
Amazing stuff. All right, so we're now at our 30-minute mark, so we'll wind it down. But I guess the question here is, if you got to be long, assuming we're going to do Market Mavericks next Thursday, where do you park some money? Just a wild guess. Not going to hold anyone's feet to the fire, but crypto, stocks, or gold? What performs in the next week best?
Bitcoin. crypto?
I have no clue, but I'm longer term treasuries. Longer term rest of the year. To me,
How about
this
you,
I did
Gareth?
this.
I don't think
Feels like
any of us
2008. Yeah,
have.
you get.
Oh, I mean, I'm going to go with altcoins and Bitcoin too. I love the
Yeah.
charts, and I
Okay,
think
so
again,
look there for a
markets are
week.
too risky, and gold is
Yeah.
is honestly a little too high even for me right here. So all right, gentlemen, thank you so much. Great discussion today. Fantastic discussion. We'll see you hopefully all next Thursday. Thank you guys all for watching. Follow these gentlemen below on their socials, and we'll take care. See you later. Take care.